Hi, and welcome to Section 3-1. Today's topic is journals, source documents, and recording entries in a journal. In class, I introduced you to the fact that we now are going to be dealing with source documents, and source documents are proof that accounting transactions really did occur. It's something tangible, something that we can actually see to prove that something happens. For example, I can say that I received cash from sales, okay, but where's the proof for that? Where is the cash? Where is the proof that there really was a sale? And so we're now having these source documents on file, or you can scan it on a computer, for example. A business might do that, and just have on file that there is proof that these really did happen. So it's not just your word against your boss's word, so to speak. So the source documents that we're going to be learning or using in Chapter 3 and for the rest of the book are checks, which in that case the abbreviation for a check is the letter C, sales invoices, which is abbreviated as the letter S, receipts, which are abbreviated as the letter R, calculator tapes, which are abbreviated as the letter T, and memos, which are abbreviated as the letter M. Now, this is a journal that we're looking at right now, and a journal is a new way that we're going to record transactions. In Chapter 1, you were given a series of columns, and we just, represented transactions with pluses and minuses. We then moved on in Chapter 2 to using T accounts to help us sort through the transactions so we can see our debits and our credits. And now we're going to take that a step further and use journals to record transactions in chronological order. It's a common practice that's used in many businesses, and it is, again, the language of accounting. So there are 4 steps to journalizing any transaction. You learned these in class today, but just to kind of reiterate, the first thing you want to do is include the date, and there is a column just for the date on the far left. You have to include the year and the month for the very first transaction on any journal. You do not have to rewrite the year or month ever again until or unless that month or year changes on the paper. So if you're only using this journal for the month of August and you fill it all the way up to the very end and it's just the month of August, you'll never have to rewrite that month. But sometimes you may not have that many transactions, and maybe you'll have multiple months on one piece of paper, on one journal. So you may have to change the months as you go on. But that's not too common. We do it occasionally, but it's not overly commonly used in this class. The second step is to write the title of the debit account title, and then also the amount of that debit amount. So in this example, we received cash from owner as an investment. So our cash was our debit account title, and the amount was $5,000 listed on the debit column. And the second step was we received it from the owner as an investment, so we used the account title capital, and that goes on the second line, and the amount for that transaction, capital, credit amount, is listed right to the right of that on the credit columns. So the debit goes first, and the credit goes second. The last step is to include that source document, the proof that the transaction occurred. And in this case, it was a receipt, abbreviation the letter R, R for receipt, and it was receipt number 1. There's also a page number on the very top of the journal. You can see it's page number 1, and it's a good idea to always number your pages so that way everything's in chronological order and nothing gets out of place. So we're going to go through an example of how to journalize. We're going to deal with 2 transactions today. They're relatively short. And you're going to be using the same paper for sections 3.1, 3.2, 3.3, and 3.4. So this is the first time we're going to be using the same paper for multiple sections in the same chapter. So the directions are on page 62 in your textbook. And they give us numerous account titles, kind of like a word bank of account titles to use. And there's only 2 transactions. Okay, so we're going to follow our 4 steps to journalizing a transaction as we read it. So on April the 1st, it tells us that we received cash from the owner as an investment for $1,500 according to receipt number 1. So what we need to do is include the date. Since this is the first transaction on the journal, we have to include the year, the month, and the date of the month. So the year of 2014 would go on the very top of the journal, kind of squeeze it in there, it's kind of small. And then you have the date, which you can abbreviate if there's not enough space to write the date. So this is 2014, the month of April. And then the little column to the right of that, we have the date, the day of the month, which in this case is April the 1st. Okay, again, the transaction was receive cash from owner as an investment. So if we're receiving cash, cash would be our debit amount since that's an increase to cash, that's a debit. So cash is our account title for the debit amount. And then we have the amount in the debit column. You can see the debit column on the right. That's where we're going to list any amounts of debits. The second line is going to be our credit account title. So we receive cash from owner as an investment. So capital would be the credit account title. And then on the right, we have a column just for credit amounts. So in the second line, we're going to list the $1,500 and into the credit column on the right. So we have our debits on the first line, our credits on the second line. Be very careful, though, as you're writing the amounts. You can see that there is a column for each place in the amount. We have a place for the thousands, a place for the hundreds, in the tens place. We also have a place for just any pennies or any cents that we might have. So you have to be very careful to list the amounts in that order using those specific columns. The last step is to include the source document, and this is receipt number 1. So we listed R1 on the top line. So you can see that the first line of every transaction kind of has a little bit more information than the second line. We have on the first line, we have the date, we have the debit account title, we have the source document, we have the debit amount. The second line has the credit account title and the credit amount. So there's not as much information on the second line. All right, let's move on to the next transaction. This is April the 2nd. It tells us that it says that we paid cash for supplies for $375 according to check number 1. So we're going to list our date, which is April the 2nd. Notice we did not have to rewrite the month or the year. You only have to do that once until the month changes. And the transaction was paid cash for supplies. Well, the debit account title would be supplies since that is an asset that is increasing for $375. So I placed the $375 in the debit column. Notice the placement of the numbers. I didn't have to place anything in the thousands column, just the hundreds. There are no pennies, no cents to worry about. And we paid for this with cash. So cash is decreasing, and that would decrease as a credit. So cash would be our credit account title. And we're going to use the credit column on the far right to include that amount for $375 in the hundreds place. So we have our debit first, credit second. And the last thing is to include the source document, and this is check number 1. So we're going to put the abbreviation of C and 1. And that is it. Keep in mind, debits on the first line, credits on the second line. Your source document is the last thing that we do. It tells our boss or the auditor that a transaction is complete once that source document is listed. Without the source document, it would be looked at as an incomplete transaction. So it's very important that you do list the source document, but make sure that is the last step of the transaction. So we've only used lines 1 through 4 today, so it's relatively a short assignment. You're now going to move on to the on your own. The directions are still on page 62 in your textbook, and they're very similar to what we just did. Just, again, follow the steps that we just completed together, and you should be just fine. Tomorrow, we're going to move on to section 3.2, with dealing with buying insurance, paying for items on account. So we're going to add a little bit more transactions tomorrow than we had today. Okay? I will see you tomorrow. You have a great evening.